All right, guys, new strategy, mogging the chart so my TP gets hit. Favor my liquidity. I'm losing my fucking mind. All right, what is going on, everybody? In today's video, I'm going to be breaking down my entire Ethereum day trading strategy in detail, okay? Now, when people think about crypto trading, they always think meme coins, oh, shitter token. No, that is not what I do. I've explained this in my previous video when I talked about why you shouldn't trade meme coins. And today I'm here to expand on that just a little bit and show you exactly how I trade it and how I make my money, okay? It's that simple. I'm gonna show you guys. All right, let's get into it. So for my strategy, there are a few key components that I use to find my entries, my setups, and everything in between. So I'm gonna go through that here. So first of all, Fibonacci, okay? Fibonacci is an amazing tool, specifically the retracements, which allows you to measure pullbacks for trend continuation, and it's basically just glorified support and resistance. That's how you can think of it. Next is the Fibonacci extension tool, which allows you to project targets beyond the current swing. So that's what I use to find my TP targets and whatnot, and usually it works to a T, but you can only use it in confluence with the retracement, and I'm going to show you guys exactly how to do that. But number 3, okay, divergences. What are divergences, Martin? You may be asking. Well, divergences are where RSI diverges from price. It's that simple. And this can either be bullish or bearish, where RSI will go higher and price will go lower, or vice versa, price goes higher, RSI goes lower, okay? It basically just indicates a possible reversal, and it's what I use to find my entries. So I'm going to show you guys now. I'm going to stop yapping. All right, so let's get into it. So I actually covered this exact trade I entered here, and you can see my TP literally got wicked into. We would have gotten hit either way, but that's how good the Fibonacci extension targets are, because I targeted the 1.618 on extension, wicked into it. I'm too good at this. All right, let me chill. But this is genuinely one of the only setups that I ever trade because it's that good, and I only execute it when I see it, which can be kind of rarely. It doesn't happen every single day, but when it does happen, it is very high conviction, and I can almost guarantee that it'll play out every time, or at least somewhat. Oops. So I'm going to go ahead and delete everything here and walk you guys through it from the beginning. So these are all the golden pockets and whatnot, so I'm going to delete all this. But anyway, so first regarding the Fibonacci retracement tool, which you can find right here, it's already built into TradingView. So when I draw mine, you can see I have a few levels enabled. I have the 618, the 65, the 705, and the 0.5. And you may be wondering, what the fuck is this shit? What are these fucking colors on the screen? But don't worry, I'm going to show you, okay? So I have it written out here. So within the Fibonacci retracement, you're going to want to have a few levels enabled, and that is the 618, the 65, which is your golden pocket, or GP for short, and the golden pocket extension, which is the 0.705, and I really only use this for stop losses, and that's what this level is down here. The 0.5 is simply the middle point in between where you draw it, and that indicates a range rebalance. So if you draw it, swing low, swing high, price comes back down, it has been rebalanced. So it's just there because I like to see when ranges are rebalanced, and it makes it easier. So now I'm on a higher time frame, which is the 6 hour, which you always want to start on. You always want to get your high time frame bias before you go to a lower time frame for execution. So my favorite is the 6 hour, and I'm going to show you why. So now on the 6 hour time frame, I'm going to draw a Fibonacci retracement from this very low wick swing low that still counts to this swing high up here, which is always how you want to draw them. You can also do it vice versa, which would be swing high to swing low. So this swing high here, all the way down here, this is your short GP, but we'll cover that in another video. I'm just going to talk about my strategy today. So like I said, swing low to swing high, I start out on the higher time frame and I draw my major golden pocket. So this right here is a major golden pocket, which we can see we wicked into it several times, and this just kind of goes to show how good this golden pocket actually is. And if we go to a lower time frame, you can see how perfect it is. So this one, we swept it, and you also always want to combine it with confluences. Okay, I'm kind of getting ahead of myself here, but you can generally see how good the golden pocket is, and it has been respected several times. But like I said, you always combine it with other things, which I'm going to show you how to do here. But with the extension, you don't have to worry about that right now. Like I said, I mainly only use that for stop losses, but as long as you have these levels enabled, that is your golden pocket, and you are good. Okay, so next, getting into the Fibonacci extension. Okay, this is where it gets good. All right, so next, getting into the Fibonacci extension tool. Like I said earlier, I mainly just use it for my TPs, and it allows you to see future levels that may be targeted with price, but this is only good if you combine it with the golden pocket on the retracement. Okay, these tools go hand in hand. You cannot use the extension without the retracement. All right, remember that. So I'm going to drop down to a lower time frame now, which is my favorite time frame to use, the 23-minute, because it is fractal, and I will cover that also in another video, but it's what I'm going to be using for this video. Okay, so on the 23-minute time frame, I'm going to zoom into this position in particular. This is the one I took the other day, and I'm going to show you exactly how I took it and what my confluences were. So first of all, we can see we are at the major GP that we drew earlier. Okay, the 6 hour GP, and anything on a higher time frame in general will be a lot stronger, including golden pockets. So for example, a 6-hour GP will always be weighed a lot heavier than a lower time frame GP, and by weighed I just mean respected, more likely to be respected, that is. Okay, so next is time alignment. Okay, with this setup I only enter within New York session after the initial manipulation move, which usually tends to lie between 30 minutes to an hour of New York open. Okay, and I'll show you what I mean here. So following the price action, this right here is about 2 a.m. on a Friday. So we're coming down overnight over Asia session and whatnot, and we come down for 1 sweep and 2 sweep. But you notice something on the RSI chart here. I'm using the TDI plus RSI divergences, and it didn't actually mark it out here where it usually does, but we do have a bullish divergence where price swung lower, but RSI did not. What did I tell you earlier? Okay, and that can also indicate a reversal. Okay, now that's one confluence. What's the second confluence? So we are at a major golden pocket. Okay, did we respect this in the past? Yes, we did. We swept it and showed bullish intent here. Okay, so I'm already kind of eyeing this. I'm like, all right, this could be a pretty good setup, especially because we are about to enter New York session. All right, right here, after we do the second swing on price action, it is 6 a.m. So I'm going to be watching and waiting and seeing if all my confluences are met, which in this case will be displacement to the upside, which we got here, which displacement can mean many things. And in general, it's really just bullish order flow or a fair value gap, a lot of people like to say, and that's the simplest explanation of it. It's not exactly a fair value gap, but that's what we got here. Okay, fair value gap to the upside. I'm already like, okay, this could be a pretty good long here. So after we form this, I draw my Fibonacci retracement on this current structure here. Okay, so from this swing low to this swing high, I will also draw a retracement. And I want to see a GP respect on this lower time frame as well for execution. All right, you always execute on a lower time frame, and in this case for intraday trades I usually do it on the 23 because I'm not a complete day trader where I'll only hold for like an hour or something like that. So I do the 23 minute because I usually have longer positions. Okay, so now coming into New York session, it's about 9 a.m. here. We can see 9:30 opens and we are manipulating heavily. Okay, within the first 30 minutes we're just chopping until we eventually come down to this current structure GP. We sweep it and start to move to the upside. Now this is past the initial manipulation leg of New York session, so the fact that we are respecting major GP, making bullish divergences on the 23 minute, and we also respected this current structure golden pocket, I'm like, okay, this is looking like a pretty good setup to me. I've entered this so many times before, and every single time, or almost every single time, it plays out to a T. So after we swept this golden pocket here, now we can actually draw our Fibonacci extension, because remember what I said earlier, we can only draw it with golden pocket sweeps. All right, so I have everything you need here for the extensions. So I'll cover this in a second, but we're going to draw it right now. So swing low from where you drew your GP to the swing high where you drew your GP, and then down to the GP sweep itself. So bottom of the wick right there, you can extend it out a little bit. And now we can see all the levels here. Now it might be a little hard to see, but I have all the levels that you need typed out here. All right, so the main levels that you're going to need is the 0.382, the 0.618, and the 1.272 and 1.618. All right, so now going down to an execution time frame, which for me is the 5-minute chart, we can see how nicely this current structure GP was respected. All right, we came down for that sweep and immediately showed displacement to the upside. We had a fair value gap with a little bit of chop, and then we finally got this change of character. So this here would have been entry for me already as soon as we got this displacement to the upside. So let's say I entered a long right here. Right, entered along here, stop loss, we can say at the bottom of this swing low where we made the bullish divergences in the first place, and my first TP is always at the 0.382 level. All right, so after you draw your extension with the GP sweep, so this low to this high to the GP sweep, you'll get all these lines if you enable the levels that I told you to enable, and you'll see the 0.382 might be a little close to entry, but it's the safest option. All right, this is also incorporating risk management within it, which is a very important aspect of trading. For those of you that don't know, I hope you already know, but I'll cover that in another video. But like it says here, 0.382 is a 20% TP for me. And once we hit this level, I sell 20% of my position, and I also move my stop loss to the 0.705 on the retracement. So that's where this comes in, like I said earlier. I just hit the extension so you guys can see it just a little easier, but on the same retracement that we got that current structure GP sweep, that's where you moved your stop loss to on that retracement 705. All right, so that's what I always do after the 0.382 gets tapped. So furthermore, the 0.618 is my next level where I will take 40 to 50% of my position off. All right, so that's this level up here. So next TP here, 40 to 50% is now sold off. So now we've sold off a total of about 70% sold. So we have 30% of our position remaining. So you might be like, where are we going to sell the rest? All right, so that's where the runner positions come in, which is the 1.272 and the 1.618. Now, down here I wrote runners for 1.272 and 1.618, but align with structure. So what I mean by this aligning with structure is you want to look at these levels and see which one best kind of incorporates structure into it. So we can see here the 1.618 just so happens to align perfectly with this draw on buy side liquidity, which a lot of people just like to target draws on liquidity, so they'll set their TP up here. But I never do that. I only do that when it aligns with my extension level. So this would be a pretty perfect level to set my runners for, which is the last 20 to 30% of my original position. So TP all the way up here, and we just let that one play out for a little longer than the other ones normally. It usually takes a little longer for it to reach it, but we can see we eventually did come up and wick right into that. So you see this here. We wicked right into it. We just so happened to come sweep this previous draw on buy side, and it also aligned with the 1.618. So that is a A+ setup in my book, and that is my strategy in the most basic terms that I can put it. And after we reach this level, that would be 100% of the position completely gone. And bam, big take profit in the books, A+ setup, textbook, round of fucking applause, all right? So now as a conclusion, I have written out all my confluences that I use for this strategy in specific. So first, bullish bearish divergences, which we saw here, we got bullish divergences, and Fibonacci retracements, either major GP or structured GP, you wanna see a sweep and respect of that level. 3, Fibonacci extension, which you use for all your TPs, and you can only combine it with the golden pocket sweeps. I cannot stress that enough, it will not work otherwise. Number 4, time alignment. I normally only enter these trades within New York session after the initial manipulation phase. So this setup was actually an A+ motherfucking setup because we just so happened to get that internal structured GP sweep right after the initial manipulation phase of New York session. So that is A+ for me because it's matching all of my confluences. And then 5, final entry on displacement in target direction, which we did get here. I'll zoom in once again. We got that to the upside after that GP sweep. All right, we came up and we showed bullish order flow, and we got that change of character up here because you could have entered up here as well if you want to be a little more safe, but I normally only enter off displacement to the upside after all my other confluences are met, if that makes sense to you guys, okay? So that's really all you need to trade this strategy, and I will probably make a part 2 of this, kind of showing other use cases for this strategy or anything else on Fibonacci, because it's very interesting to learn and it works 90% of the time, give or take. I don't really know the exact number, but it does work a lot of the time. And it doesn't happen all that often, but every time it does happen, like I said, it is very high conviction and it plays out almost every time. All right, so that's really the only setup that I enter for intraday kind of trading and maybe even short-term swings. But for day trading, I will make that in another video where I do, 5-minute kind of setups and whatnot. But otherwise, that is basically my primary strategy that I use to trade Ethereum, okay? So hope you guys enjoyed this video. If you have any questions at all, feel free to leave a comment below. And as always, I love you guys. Happy trading. Mwah.